Hi everyone, and welcome to a new video series where I look up an interesting financial article and give my personal thoughts and opinions on it. Now, this particular article is from CNBC in the US, and it says that wealthy investors see nothing that will stop this relentless bull market. And some of the key points that it's got here: investors with 1 million or more in brokerage account are significantly more bullish than they were a quarter ago. And many of these wealthy Americans were fearful of a market drop and recession last quarter. But now 76% of millionaires think of the US economic condition as an A or B, and they believe the market to rise by as much as 5% in the near future. Now, what do I think of all this? Last year has been marred by uncertainty. There has been a fear of recession, stoked by the inverted yield curve, sluggish global growth, and the trade war with China, and the Hong Kong situation. But despite all of that, the US market itself has gained almost 30%, making it one of the best years in history. So whenever the mainstream media talks about the chances of a recession, what normally happens is the market actually goes up. Now, on the other hand, if the media talks about a bull market, what tends to happen is that the market will drop. So when you do the opposite of what the media says, you tend to end up better off. Now, personally, I don't believe that the media is trying to deceive you in any particular way. But what normally happens is that by the time the media gets their news, the big institutional investors, such as the large hedge funds, have already bought the stocks or shares at a low price. And by the time the retail investors get the same news, the institutional investors are already ready to sell off their shares or stock for profit. So if we look at this article some more, investors are more open to taking risks at this point, says an investment strategist. And by that, they are talking about retail investors, not institutional investors. So institutional investors are almost ready to cash out at this point. So this article does say that there's reasons to be cautious, but it also says that they didn't have much in the way of earning growth last year, but they do expect to see a reasonable earning growth this coming year, and that should be constructive for the market. The article also did a survey of the millionaire investors, and more than half of them perceive themselves as being bullish on the particular market. At the end of the article, it talks about the fear of missing out. So here it says global growth optimism has surged by the most in 20 years to an 18-month high. And recession concerns plummeted 33%. Now, the thing that I would really worry about here is the fear of missing out, because fear of missing out is one of the precursors for a market drop. If we look at the end of this article, and the article that it's suggesting that the rally is just getting started, and stocks could gain more than 20%, and a potential market sell-off would be a terrible thing to waste for investors. So basically everything here is suggesting that the market will keep on going up. What would I do in this particular situation? Now, keep in mind, I believe that you should think for yourself. So when everyone is saying that you should put more money into the market, what you should really consider doing is holding off putting money into the market. So basically, don't do the exact same thing that everyone else is doing. When the media says that everything is bullish, you could consider taking some profits off your shares. And if the stocks do indeed drop, it may be able to pick up the shares on a discount. Now, if the media is correct and everything just keeps on going up and the bull market continues, there is nothing wrong with just holding on a little bit and considering the current situation. So that's what I would do in this particular situation. Let me know your thoughts in the comments below, and I will see you in the next video.